FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. I'm Kerry Lutz, and today's February 19th, 2018. Well, you saw what happened to the market the week before last. Was that just a blip, or have things changed? And what of the real economy? Is that going to have a negative impact upon the market economy, or Wall Street as we refer to it? Well, those are good questions. We'll see about more. Hey, as always, join the show, participate, email us kl@kerrylutz.com. Any questions or comments? So what's happening with the market? Is it turning? Are we heading for a bear market? Well, someone who's been spot on in his prognostications, his forecasts of the markets almost to the day is Nick Santiago, InTheMoneyStocks.com. Nick, welcome back.
Hey, great to be back, Kerry. Thank you for having me.
Hey, so volatility, is that a profit opportunity, or should you be running for the hills?
No, this is a great profit opportunity. Only thing is that you need to be a trader now. You can't just look at it like it was in 2017, where you could just throw a dart at the wall and everything would go up. The market is a leading indicator, and it tells you what's happening out there, but it leads by 6 to 9 months. And, you know, after Trump won the election, the market really had not stopped. And basically, the last time we spoke, I basically said, you know, we're not going to have this 2017 run-up. You're going to hit walls and you're going to come down. And it's really just, you know, more good news. Interest rates are starting to creep higher. You're starting to see the economy really, you know, take off. But as things heat up, the stock market has already factored all that into the cake. And, you know, people are going to start to need to adjust to higher interest rates. And they're also going to need to adjust to just a market that's not going to go up in a straight line. I mean, that was a complete gift in 2017, and I think, you know, people have to realize that that's just not the way that markets function. Markets back and fill, and 2017 is going to be a big trading range, and as long as you can spot those ranges where the peaks and the troughs occur, there's a lot of money to be made. In fact, I'll make more money in 2018 than I did in 2017.
And 2017 was a great year just based on the indexes. So, you know, when you say it's going to be different, is it still heading up, or is it just going to be a sideways market where you just have to capture the trend? How is this going to work?
It's going to be a trendless market. It's going to be a market where it's going to be so technical. For instance, if you look at February 9th, when the S&P put in a little bit of a low, you're going to see that the S&P spiders, the SPY, or you could use the S&P cash index, but you're going to see it went right down to the 200-day moving average. The 200-day moving average halted the move, and it reversed. The market went right back up. Now we just hit the 20-day moving average. So the S&P spiders went from a low on February 9th of around 253, and we just went all the way up to 274 on Friday. So now you know we're at a resistance point. Now the market will pull back again, and it's just going to be very, very technical throughout the entire year. You're going to get these big rallies, and then you're going to get these big sell-offs. You're going to get a lot more geopolitical events coming out. I'm never good at picking catalysts. As you know, I'm a chartist, and I like to look at what the markets are telling me. I like to look at the trend. I like to look at moving averages and a host of other things on the chart, including volume. But what you'll see is that this year, and we talked about it, you know, even prior to 2018, that 2018 was going to be this choppy sideways market, but it's going to be range bound, and you're going to need to know what the patterns look like, and that's what's going to make money this year. But if someone's going in thinking the buy and hold strategy is going to work this year, they're dead wrong. It's not going to work in 2018.
So, but you don't see the market taking big hit to big down leg after this tremendous run up that we've had the past 9 years already, Nick?
I don't see a bear market. I think, you know, corrections of 10 to 15% are possible. We just had our first 10% correction since February of 2016. So we're gonna experience declines like that in 2018, but there are going to be opportunities to jump back in and buy the market if you know what you're doing.
Right, and that's the big if you know what you're doing, and that calls for a certain amount of creativity, a certain amount of thinking outside the box, right?
And it calls for, education in technical analysis. And, if anybody goes back and they look back 10 years and you remember 2008, and I'm sure most people remember it very, very well, you're going to know back in 2008, there was a lot of opportunity on the long and short side. Although the market did trend lower in 2008, there were incredible buying opportunities there. And I think we're going to see a similar type market without the extreme moves that we got back then. So I think this is going to be a sensational year for traders, not a sensational year for the Warren Buffetts of the world that will buy something and just hold on to it for 3 to 5 years. So again, if you have a long-term perspective and you're going to sit with a stock, you're going to probably do well in a few years, but you're going to have to go through a lot of bumps. Traders like me, we enjoy these bumpy rides. The turbulence is where we can really separate ourselves from the average group of people out there that are trading an E-Trade account, buying 100 shares of stock. We're looking to capitalize on these moves up and down all the time.
And reasonably, you've been doing this a while. If you're fairly proficient, you follow the trades that you talk about, what kind of returns can you get here?
Well, I think, if each trade that you get into, every stock is going to be a little bit different because you're going to have different industry groups, different sectors that will move. Basically, what's going to happen is money's going to rotate from one area to another. And depending on that sector, you could get returns of 6 to 10% per trade. I think that's kind of what I average. And if you use options, which I do, obviously the returns are much, much greater if we do hit the option, but they come along with a lot more risk. And, not everybody is able to handle higher risk plays. But, for instance, I captured some options last week, 82%. I had another one for 60%. And then on my swing trades, which are trades that we hold for several days to several weeks, I've closed out 8 trades this year for an average of 6%. So each trade, that is. So it's been a very, very good year so far, and it should continue that way.
Yeah. So it's pretty remarkable that you can do that. I always thought returns like that were only for the pros, but you are a pro, obviously.
I've been in this business longer than I like to tell people, but this is something where if you can lose that mindset of listening to the story, because if you ever get a telephone call from a stockbroker, what's he going to talk to you about? He's going to tell you about the next greatest drug that's going to cure cancer, or he's going to tell you about the next iPhone that's going to come out and do 100 million things and show you a new emoji. I could care less about what a company does. I could care less about what sector a stock is in. All I care about is what the charts are telling me and the money flow. And when I can find a level where the institutions are going to buy our stock, I want to be in it. And when I can find a level where the institutions are going to sell a stock, I want to short it. And that's really all I do. It's very, very plain. It's very vanilla. But the reality of it is all I care about is the money flow. Is the money flow going into an equity, or is the money flow going out of an equity? I don't care what the equity is. I don't care if it's an ETF, if it's currency, if it's bonds, or if it's just an outright stock like McDonald's. If there's money to be made there, that's what we want to try to capitalize on.
Yeah, and you don't really care what the market is. What stock you're buying or selling could be cigarette stock, or they could make nukes or whatever, right?
I have no preference as a trader. My personal feelings about everything are on hold, and the bottom line is I trade the technicals and I look at the money flow. And if that money flow is going in, we could be buying anything, and we could be shorting or selling anything, provided the money flow is going to go back out. And really, that's all we look at, and that's all I care about. I don't care about anybody's opinion. I don't care about what somebody what the next great drug is going to be, it really has no bearing on what I do. I'm in for the run, and then when I hit, if I buy a stock, I buy it at an excellent support level where I believe the institutions are going to prop it up. And then when I see the institutions are going to get out of it, that's what I want to do. I want to get out of it with them, and potentially I'll even short that equity.
Yeah, so you could be long a stock one moment and then short a stock the next, huh?
There's many times where I've flipped my long right into a short the very next day. Wow.
Hey, so what about precious metals? What are we looking at there?
Well, gold has had a very, very good run-up on the dollar backtracking. If you remember the last time I was on your program, I said I was looking for a low in the dollar, and we got that. We had a nice pop in the U.S. dollar index, which is the dollar versus a basket of 6 currencies. The most highly weighted currency in that basket against the dollar is the euro, and we had a really good run-up. The dollar went from basically 88.5 on the index to all the way up to 90.5, and now it's retreated. But I do think the dollar is putting in a longer-term bottom. I think that's in place right now. We could be in the start of what we call a W pattern, and that's where a dollar, where an equity sells off, puts in a low, bounces up a little bit, then comes back down, takes out that low by a little bit, and then rallies back up. And we just saw that happen on February 16th. So I think the dollar is going to start to move higher. Once that happens, I do think that gold retraces and comes back down. As you know, Kerry, I do own gold and silver bullion. I have for many years, but I'm in the camp. We're going to be able to get gold a bit lower down the road, and we'll see gold really take off probably after this year. But right now, I do think the dollar is in a bottoming process, and it's very, very unlikely that gold and the dollar rally very far together at the same time. It has happened in the past, but I don't see it happening right now.
Yeah, understandable. Hey, you've been watching the cryptocurrencies?
I do follow just Bitcoin predominantly. I don't really follow the others. There's so many popping up day by day. You had that big crash in cryptocurrencies, and now it looks to be trading a lot like the actual stock market. It's pretty incredible. But there, the cryptocurrencies, like everything else, can be charted, and we're starting to put out analysis in the cryptos as well now.
Yeah, I mean, I'm looking at just broke 11,000, which seems to me to be a definite technical buy. It went as low intraday as 6,000 and actually broke 6,000. And then
broke it, yeah.
Yeah, and then it continued kind of going up here. I mean, from its low, it's almost doubled now. Like people said, oh, it's a buying opportunity, but you can't get involved with the emotions for this stuff, right?
Hey, you got to leave the emotions out, and the bottom line is, when Bitcoin went parabolic, and then that's a chart formation that we use, that the run is going to come to an end, and you could see that's exactly what happened when it came crashing down. Now you put in a really nice low. I actually like the low that Bitcoin did put in, and now I think that we're probably going to see this go a little bit higher before it's done going down, but I don't think that you're going to have that kind of move back up towards the old highs. What I'm penciling in right now is a move for Bitcoin to probably get up to that 13,000 area. It's hard, this thing trades like the Wild West out here, but when you get to 13,000, I do think that's where it puts in a little bit of a stall and potentially starts to pull back around that area.
Yeah, well, if you draw the lines on the trend, you had that high of 19,343. Then there was a head and shoulders pattern almost where it went to 17,000. And if you just draw that line down, it looks like it's in a downtrend. It really does from that.
It's trending down, and this is what you got. You have a classic retrace bounce right now. You did go as high as 19,700, I believe, and that was
correct. Yeah,
right in December. And from Thanksgiving to December, I mean, it went parabolic. And anything that goes up in that kind of a trajectory. So if you were to take a protractor and basically draw a line from the last pivot low in Bitcoin, you'll see that protractor went up in probably a 70-degree angle. angle. That's unsustainable.
Right. Oh, for
and
sure.
then you came crashing down, in a series of a week or so. And then, you did chop around and then it put in a little bit of a sideways base and it came crashing down again. And that, crash basically started, I guess, in, early January. And then we put in an oversold condition low. And it was a very good level because Bitcoin went all the way down to the 6,000 level, which, if you take a look at a chart, that was actually the breakout from Thanksgiving. So that's exactly what it did. It went and tested, that breakout the week before Thanksgiving. And, it's just classic retraces here. But, move up to 13 traders. If somebody's trading Bitcoin, that's where I would, jump off the train if you are holding it right now. And potentially it could be a short play there.
Yeah, that could happen in a day or two. Easy. It could happen today.
Bitcoin moves, yes.
It could actually happen today. I mean, it's at 11,200 as we speak. Today's high was 11,254. So, when you draw those lines, though, it's pretty apparent. Like you said, 13,000 and then breaks down again. That sounds like about right. Yeah.
I mean, even if you look at the 13,000 level, if you just look at it and you draw a straight line across, you're going to go back the exact day. Let me just grab that for you right here on my chart. So the exact day will be the high of December 16th. And that high on December 16th was 13,246. The low on December 16th that day was 10,098. So
it went parabolic that day.
Yeah. So just think about that sell-off. When you get to that 13,000 level, all the people that were buyers there now are going to turn into sellers. So that's kind of the way, partially the way technicals work. You always look for where the sellers were or where the buyers were and they got fooled. And then you go back and you look at that reflection point, and that's where you'll usually sell off again. Yeah,
totally understandable. I mean, we're dealing really, when you get down to it, it's human nature, right?
It's human emotion, 100%. And, the legendary trader Jesse Livermore used to say, the stock market never changes because human nature never changes. And I know a lot of people, the millennials, don't consider Bitcoin the stock market, but if you can chart it, you can trade it.
It's a market.
I've done this with my own kids regarding baseball cards. I've said to them many, many times, they want to buy an Aaron Judge card because he's a hot player. And I said, well, let's chart this out. Let's see. Aaron Judge now is so popular, and you could find out how many cards are being sold. I said, do we want to buy that card at this price up here? Don't you think it's a little high? And then sure enough, Aaron Judge goes into a slump and his card value comes down, and, my kids get to buy it on sale. So it's the same thing for, the charts tell you everything. You could chart out your life if you know what you're doing.
Hey, and, it's so true. The market might not be predictable, but human nature certainly is when it comes to markets. And we've seen it over and over again, right? Over and
Absolutely.
over.
Absolutely. And the funny thing is I get a lot of questions. Hey, Nick, there's so much program trading going on. There's so many, there's AI going on. I said, well, who do you think programs all of this stuff? Do you think a robot programs it, or do you think that a human programmed the robot? And, therefore, I believe, the market has actually become easier for me the more programs we have because it's just quicker. The moves just occur quicker. And as long as you can read it and understand the charts, there's definitely money to be made.
Agreed. That's for sure. There's definitely money to be made. And that's on the upside or the downside. You don't have to be partial to either one. And so you have to have good reflexes, though, in this market, right? I mean, you got to be totally...
The 2017 straight up market, 75, 80-degree angle market that just goes up and never goes down is over. 2018, you're going to have to be a trader. There's going to be great opportunities on the long side and the short side.
Yeah, so these are like very infrequent events where you have that straight up market. It just doesn't, life doesn't work that way.
No, life doesn't work that way. It did work that way last year. And, to a fair degree, you could make a case since January and February of 2016 it worked that way. I mean, we have not seen a 10% correction, until this year. And we talked about it last year that 2018 is going to present those opportunities. Mm-hmm. And, this was the fastest 10% correction, I believe, on record. We put a little top in on the 26th of January and put a bottom in on the 9th of February. So, there's a lot of opportunities now, and it's a great environment if you understand money flow and you understand pattern on charts. And it's just going to be an incredible opportunity in 2018 for those that know how to navigate through these waters.
Yeah, and they are tricky, so that's why you probably should start with subscribing to InTheMoneyStocks.com. Just tell us, how do we do that, Nick?
Yeah, just come on over to the website. Just check out some of the rant and rave blog posts that we put up. I mean, I put up trade setups almost every day. There was a trade setup I put up, weeks in advance. I put this trade setup, I believe, on February 6th on the blog, and I told traders when the CBOE, and that's Chicago Board of Options Exchange Global Markets, gets down to around $97, it's a buying opportunity. Last week that got exactly to that level, and it bounced all the way up to 116. I mean, just think of the percentage gains you had there in 5 days. So there's opportunities. We put out, all of these free setups right on the blog, and then the premium service, you give that a shot. We offer a 7-day free trial to our research center, offer a 7-day free trial to our chat room. We do not offer a 7-day free trial to our options alerts, but again, we're having a great year right across the board.
Hey, that's amazing. So you can thrive and prosper in any market. It's just a question of your willingness to do what you have to do, understand the risk, and go. So anyway, find Nick at InTheMoneyStocks.com. Watch out for this market. It's not like the market that it was last year. Check us out, FinancialSurvivalNetwork.com. Subscribe to our newsletter. Got one coming out later this week. I've been pretty good with it, actually, in the past few months. Missed a few weeks here and there, but that's to keep you on your feet. And don't forget, be part of the show. Join us. Email us at kl@kerrylutz.com. Twitter feed @KerryLutz. Facebook page, Financial Survival Network. Just have to mention this one funny article, Nick, that Canada, the press department there for the Canadian government, had to put out a denial. No, Fidel Castro is not Canadian Prime Minister Trudeau's father.
That is classic.
Yeah, I mean, there's no way that he could be, but spiritually, Castro is his padre. There's no question about that.
Yeah, it's pretty amazing. But this is the world we live in. It's unfortunate, but we've come to a point in society where you have two different sides now, and I guess that's the way it works. But in my opinion, there's nothing better than capitalism. Just look at the advancements the United States has made in the last 100 years, and look at the advancements that Cuba has made in the last 100 years, or even the last 50 for that matter.
They haven't had any advancement. They've gone strictly back. They've gone native. The place is falling apart, and you really just can't even believe how bad the place is. I mean, it is. I've been there twice. It's close to Florida, and the place, I love the place. The people are great. They really are great. But the place itself is just a garbage dump. And
now, watch what would happen to that, Kerry, if they turn to capitalism. Watch what in 5 years the change that would happen.
Oh, yeah.
I mean, that place was one time, was an oasis.
Yes.
And look at what's happened, after the Castro regime, and unfortunately, they're starting to be a little bit more open, but they have not made the changes that they have not embraced capitalism with open arms. And once they do so, they're going to see quality of life change for every single person there.
Hey, well, now they're rolling back the changes because they're upset that some people own 4 and 5 restaurants. And how could this happen in our workers' paradise? And,
I know the story all too well, unfortunately. But, it's just amazing. Just watch this country with tax cuts. Mark my words. We're we're going to have a run like nobody's ever seen before.
Well,
so
we talked about that last time, and I believe the last time we spoke was before they started with AT&T kind of kicked the whole thing off with the raises, increased, they went to $15 minimum wage for the company. And look, like we had talked about it in the abstract, it's going to mean more jobs. It's going to mean that companies aren't going to be so quick to buy back their stock anymore. They're actually going to see investment opportunities in their core businesses and invest. But I don't know about you, Nick. I never saw it going so quickly to the workers, even though it's not the entire tax cut. AT&T is getting an extra $2 billion a year, so they're giving their employees about $400 million. Not so bad. And
it's fantastic.
Yeah.
It's fantastic.
Yeah.
And that's going to spill over into the economy. Mm-hmm. And that's why you're seeing the stock market go down, because the stock market's been so addicted to, central bank intervention and all this fuel with easy money. We're able now, for the first time ever, the Federal Reserve is no longer printing money. They're actually, going to take, they're actually going to limit the money supply, and they're going to start to sell back bonds to the open market. So, these are good things for the economy. Unfortunately, not good for the stock market, but the stock market has run hot for a long, long time. And, if you know what you're doing, like we talked about before, you're going to have great opportunities. But you're already seeing the benefits. And it's unlike the Reagan tax cuts that happened, which were prolonged. So he implemented tax cuts, but they didn't kick in for 2-3 years. These tax cuts that Trump implemented are kicking in day one. They're already happening, and we haven't even felt the effects of them yet.
Hey, and the beauty is, the brilliance of what they started doing is, look, 2017, the official federal corporate tax rate, 35%. We're going to give out the bonuses. All right. We're going to give them out in 2017. And so it's going to get deducted from our 35% tax rate. All right.
That's
the government's paying a third of it. And then, we get into 2018, obviously, they'll do another one the end of the year. I mean, I kind of think they have to. They're kind of locked into this as long as profits go up.
They know that.
Yeah, but
corporations do know that.
But they get to lower their taxes and be benevolent and cut their taxable income for 2017. And then, next year or this year, 2018, they won't give that bonus until after the first of the year because, it's better for the employees, better for them. Then it's not income till 2019, but they played it perfectly. And thousands of companies are doing this, Nick, and millions of employees involved. And that is huge. And even Walmart's gotten into the act of $11 minimum wage that they're paying. And bonuses and benefits and everything else. This is a windfall for the employees of the nation and for the entrepreneurs as well. It's going to spur entrepreneurial risk-taking once again. And
the opportunities are just going to grow from here. Just look at what Apple has done or what they've announced that they're going to do.
Yeah.
I mean, it's just absolutely incredible. And, to hear people or politicians be against this is just absolutely blows my mind. I just cannot fathom what these people are thinking.
Oh, I can fathom.
It's really mind-boggling that, people do not want to see this country prosper.
I can fathom it. This is the mirror image of Obamacare, where they're pushing Obamacare against all the evidence that it is going to injure the worker, hurt the economy. It's deflationary. In the middle of a recession, you're raising taxes, and then it goes to hell. And the Democrats are in total denial over it. Here, this is the mirror opposite. The Republicans push it through with 0 Democratic votes. From day one, it is a major success. And what's happening? The Democrats are in complete denial over it and saying that it's injurious to the economy. This is a disconnect from reality. I could go on all day about it, Nick, but I know you have to get back, even though today is a off trading day because it's President's Day. But it's remarkable in the respective attitudes of the parties towards fundamental economic laws that are immutable, Nick. You can't deny that when you cut taxes, people have greater incentives to invest, right? I mean, you can't deny that.
100%. There's no denying it.
Yeah.
And you, like you just mentioned, you are already seeing the positives. And here's the great thing. The American workers are starting to see the positive now, and that is going to transfer over. I have a boat. I went boating yesterday, and I was just talking to one of the guys at the dock, and I said, I need a 100-hour service. He goes, hey, that mechanic there is the best around here. He goes, why don't you just see if he could do it at the dock? And I went to him, and he goes, Nick, I could do it. I could definitely do it. He goes, but I can't do it till July.
Oh,
and
my God.
I just said, wow, look at that. This guy, he's the mobile mechanic. He's the hot guy in the town, and he's busier than ever. And that just goes to show you what's happening out there.
Hey, make America great again, right? Well, anyway, make your portfolio returns great again. Go over to inthemoneystocks.com. I do. And Nick, we'll talk to you again real soon, man. It's great speaking with you.
Great speaking with you too, Kerry. Thank you for having me.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.